Happy Monday, everyone. It is the 10th of May, 2021, the second trading week of the month. All right. This past weekend, had some pretty nice moves across the board. We had Cardano move big time. It created new all-time highs, reaching all the way up to 189.27. Really nice move. Then we fast forward to today, and we see that we opened up at 176, and we traded as high as 184, and as low just recently as low as 151.62, and then we've kind of bought that back up. The whole cryptocurrency market has had a bit of a dip intraday during Monday's trade. So what does that mean for us moving into the remainder of the week? Looking at the daily chart for Cardano, it still looks a little weak here. You can see the RSI is sloping lower, but then more specifically is this right here. The composite index has crossed below, now unless something changes in the next hour, but the composite index line is crossed below the fast moving average. That is generally and usually a sign that there is going to be some corrective movement up ahead. When we looked at anything where there was a close below 157.32, you look at the last 3 days, that has been actually last 4 days, it's been a pretty good support zone in there as well. Look at the lows here. So the low on the 7th was 152.62. The low on the 8th was 152.67. The low on the 9th was 152.74. So really they're almost exactly the same. But we see today we do have a lower high and a lower low than the prior day. So that could be a warning sign of moving forward. When we look at the structure on the inside here, we looked at the 4-hour and the hourly, I believe. We saw this ascending channel that is part of a broader bull flag pattern. Traders did trade into it, and then we fell down lower. It's still a bull market overall, so we could see it trade higher. I think we still need to look at the threat to the downside. So, where is it going? That is what we want to figure out. Things have changed a little bit because of the new high, and I think we need to take that into consideration. If you remember, I believe it was on Friday, I wrote about having some resting limit orders at 60, 50, 40, 30, and if you wanted to 20% from the most recent all-time highs. So 60% below where our all-time high is at 73 cents, 73.67. The 50% level is really within that original support range we talked about over the last couple months, the 84 to 94 value area. That's what we are looking at as far as a near-term major support zone. The 40% range brings us to $1.10, and then the 30% retracement brings us to 132.98. So watch out for those zones up ahead. The support zone that makes the most sense is the 30% retrace. I don't know, what is this? It's 25%? The daily Kijun sends a 25% retracement from the all-time high. So the daily Kijun send would not be a horrible place to look at for a support. I really need to take a look at the weekly chart here quick. I want to get an idea of what our fib retracement ranges are at now. There's our all-time highs at that 189 level. The strong bar in this move is over here. The 50% retracement in our fib level to the strong bar here is at 78. 382 is at 97. The 50% is at 78. And the 618 is at 64. I think it makes the most sense to look at the Kijun-sen as kind of our point of reference for a near-term support level. It's slightly above the high volume node. There's a high volume node at 121. That is kind of in between the 40% and 30% retracements. So, and that's where the Senko span A is currently kind of sitting as well. So I think that's a good level to look at. 123 to 125. That's a good limit buy order zone. As far as the target to the upside, still would be looking at the 2.2 to 2.6 value areas moving ahead. All right, that does it for me. Y'all have a good rest of your Monday. Have a great start to this week, and I will talk with y'all later. From all of us here at Exchange Rates UK TV, please don't forget to like and subscribe.